Hi everyone, welcome to the weekly stock market update for the Great Investments Program. And as ever, quite a bit to go through. So let's kick off with the fact that Microsoft is now a $4 trillion company. Uh, Not exactly a great prediction to have made, but I'll show you the other companies which are on that list who will be next in line for that, and is definitely going to happen for them. That is because they had a big stock price rise, surprise, surprise, because they exceeded earnings. It's earnings season, as I've said in my weekly broadcasts, and shown you the dates of those, and companies which beat earnings are going to do better. Those who miss them, narrowly even, are going to be smashed. We said that previously. And the large consensus on Wall Street seems to be buy the dip on those. We'll see. So if you take a United Health or a Novo Nordisk, missing earnings, you're going to get punished really hard. Why? Because people can put their money elsewhere and they know others are going to punish you, so it becomes self-fulfilling in any event. Uh, I'll come to Novo in a second and United Healthcare. So earnings are yet again knocking the ball out of the park. Meta, equally massive 10% rise, revenues up beyond expectations. Okay, markets beating expectations, prices go up. Uh, so is the market too expensive? So one question I've had from one of the students is, Alpesh, I don't want to get invested, not even dollar cost average, because I think the market is expensive. Uh, so let's look at what does expensive mean and what could the implications be. Well, the implications, whether or not it's expensive, because even when it's cheap, it can fall, probably more likely to when it's expensive. What are the main reasons causing market falls? Well, obviously, in terms of crashes, profit and loss, like the dot-com bubble. All of a sudden, people realize these companies aren't making profits. That's not the problem here. Cash flow suddenly stops. COVID, another reason for a crash, or balance sheet. So P&L, cash flow, or balance sheet. Balance sheet, assets aren't worth what we thought they were. That was the financial crisis. So what else could cause a fall which isn't a crash? In other words, something like 2022, momentum, interest rate concerns, profit taking. Valuation, in other words, is not the only thing which can cause markets to move lower. Momentum can. Just one person selling, so others do. Interest rate movements, a whole bunch of factors can make it move lower. So how close are we, therefore, to, instead of guessing which factor it might be, which is a lot harder, than just looking to see